there's a theta decay to the bearishness here. Every reason that we're bearish has been talked about now for at least 2 to 3 weeks.
Totally agree.
And so there's all of it's already out in the open. And yes, it could get worse, but basically every day that goes by that it doesn't get worse, that there's not a new catalyst to send us lower, it's more likely that Bitcoin goes higher and in the short term. And the reason is because people have de-risked.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show.
All right, what's going on, everybody? We got a big collab going on here today from the Digital Assets Summit. We're on day 3, and we just had to run it up again like we did in permissionless. So we got the 1000X guys. I'm here for forward guidance. We're live on the floor in the expo hall. Things are going off. It's been a wicked few days, and yeah, just really great to catch up with you guys. What's going on?
Yeah, thanks for having us here. This has been an awesome conference, I do have to say. So many people, a lot more optimism than I expected, given the fact that ETH Denver, it was just absolute tragedy, despair everywhere. And if you go on Twitter, you think that everyone's like on the verge of suicide. I mean, it's like, this is great. People are talking, people are doing real things.
Yeah, it's been awesome here. First of all, thank you for working with us on this podcast. You're the hostess with the mostest. We love you. It was fun to talk.
So I got to suit up,
in Utah last year. I echo what Avi said. I think it's kind of interesting. Like Mike Ippolito, the co-founder of Blockworks, tweeted out this thing that went viral. He said, "I've never seen the institutions more bullish than the natives," which is food for thought, right? Like the people here are psyched about crypto, and the people on Twitter are in a state of despair because they're either ETH maxis who have just basically seen their net worth deplete over the course of what should be a bull cycle, and then a lot of altcoins are down 80-90% from the highs. So I think like the real degens online are depressed, but these are not the degens. And we did at our panel on Tuesday, we did like an audience Q&A where we said, raise your hand if you've sold core holdings over the course of this, sell-off from the post-election pop. And it was like 5 people in an audience of hundreds.
Basically nobody raised their hand. And that's when it kind of clicked in my head what's going on and where the optimism comes from. It's that everyone here has a portfolio and that they're allocated for the long term. Like basically 80% of the people that you talk to here are the institutions, are the people that bought into Bitcoin thinking this is going to become a massive asset over the next 5 years. And so they're probably pretty happy because they allocated to the crypto space. Maybe they bought 50 to 80% of their portfolio in Bitcoin and the rest of it maybe in ETH and Solana. And so they're still up. They're still, they're still pretty happy. Whereas all the people that are depressed are the ones sort of on the cutting edge of crypto, whose portfolios probably look a lot more like 80% random altcoins that have marketed themselves very well, and then a tiny bit of Bitcoin. And so obviously they're depressed because if you look, I mean, ETH is down 20% since the election. That's pretty nuts. Like that is a truly doomed asset right there.
Yeah, I think this theme is so key and it's so interesting on so many different facets. One of the most interesting things for me is that retail implosion that we've seen has been entirely, self-correcting. Like there hasn't been a catalyst necessarily. It's just this, like maturation moment. It feels a lot like, where, the pumped up fun thing, like, yes, there was the Trump coin that marked the peak on top of that idea, but overall, it was just a self-cleansing moment. And at the same time, you look at what's going on the regulatory front of, finally banks can custody crypto in a proper manner, the SAB thing and all of that. And suddenly, these asset allocators that have a much longer time horizon, they're getting excited for these prices and starting to come in. And yeah, it feels like our industry is growing up, and that's going to make a lot of crypto OGs a bit sad probably. And that's okay. That's just, it feels like this continued bifurcation between, the suit version of crypto and the retail, like on the cutting edge, like you say.
Well, I mean, it's the world's smallest violin playing for the OGs who are sad. Like they can they can cry all they want in their villas in Monaco, and leave some for the rest of us OGs. I think to me, like Avi and I like to talk a lot about, whether Bitcoin is rich or cheap, whether crypto asset X is rich or cheap. Avi has a great model for basically determining where participants are going to get excited. My model is a little bit different, so I appreciate Avi's take, and I overlay it with my own, which is kind of flows based.
Yeah.
So like where the flow is going to come from over the next 6 to, let's call it 24 months. And if what we're talking about here remains the case, which I think it will, which is institutional flows, like those flows are really going into Bitcoin. People are going to say, all right, there's trillions of dollars of wealth out there in portfolios. Maybe we start upping the basis points allocated to Bitcoin from 0 to 10 basis points and 10 to 20. So that's where the inflows are going to come from. So you can feel good about Bitcoin, but like those people are not going to be buying your shit coins. They're not going to be buying your bags, or they're not going to be, if Bitcoin is a stretch for them, they're certainly not going to be reaching into like risky alt world. Meanwhile, in risky alt world, like, DPIN, a sector I hate, in order to run, physical hardware and share it with people, you get rewarded with shit coins. You need to sell those shit coins. Somebody has to buy those shit coins. And it's not going to be like retail is tapped out. They're on Twitter talking about how suicidal they are. The institutions are not going to buy those coins. It's the same story for, name your vaporware project out there, or even some of the good projects. Like it's going to be a real tough time given, inflows into Bitcoin are going to buoy that asset. Outflows from all these other tokens seem kind of limitless at the moment without an excited retail base to absorb them. So I think the playbook has to change. I think
it totally does. Yeah, like I'll just say that, even speaking to some of like the liquid funds here, they're not even interested in jumping in front of that. I saw that back in January, we saw that there's like 32 billion of unlocks hitting alts this year. And we have like the same amount of alt capital, which is like this much. And then, there's like the institutional version of Bitcoin out here, and that's where all the money's going, to your point.
Yeah.
They don't want to get in front of that train either. So it just feels like most of the alts that exist today, it's just going to be this continued bleed as people try to get out. And I'm starting to think about what is the next 2.0 structure of these alts, and what does that structure start to look like, that where the dynamics are a bit more positive for the space. And I don't know if I figured it out. I'm curious if you guys have thought a bit about that.
Just to go back to the flows comment for a second, I think the word of the year is saturated. Like
totally.
The market for alts is just saturated. Why were people buying these things? They were buying them because they would go up. It was like kind of like a lottery ticket, right? There was this massive dream that, you could buy a meme coin and it would, 100x, it would 1000x, and you'd put in $10 and you'd walk away a millionaire. And that extended not just to meme coins, but to a lot of altcoins in general, like even L1s. Oh my God, maybe Solana is going to take over the world and everything is going to run on Solana. And then what you get is hundreds of different types of L1s launching, hundreds of different kinds of meme coins launching. And the moment when Trump launches, that draws everyone's eyeballs to crypto. And that was a moment, in my opinion, of peak saturation. At that point, there was nobody else that was going to come in that wasn't convinced about crypto before, that they were going to come in and gamble on this thing. And so that's where we are now. We have the maximum of people that are willing to gamble on an asset that doesn't have real value in the market, but billions and billions and billions of dollars of not just old issuance of unlocked tokens, but new issuance of new coins. Like every month, a new coin is going to launch, right? That is going to claim to try to take over the world. Like Barachain with the L1s launched, Monad's going to launch. It's just a diffusion of capital. Bitcoin is not saturated because Bitcoin has new flows from institutions that are slowly coming in because they have a 5 to 10 year thesis on the Bitcoin market, that it's going to grow because it's genuinely valuable. So that's where we're headed. We need people to be able to look at an altcoin or a separate coin in crypto and say, I have a 5-year thesis on this. I'm willing to allocate because I think this thing can generate a lot of cash, pass it back to its holders, and operate as a real successful company in the context of crypto, right? The gambling era is over, in my personal opinion.
Yeah.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. Today's episode is brought to you by CryptoTax Calculator. Make tax season stress-free with over 3,000 integrations to support all of your wallets, exchanges, and on-chain activity. Simplify your crypto taxes by creating an account, importing your wallets and exchanges, then simply review and download your tax report. By using our exclusive discount code BW2025, you can enjoy 30% off all paid plans. This deal expires on the 15th of April. So make sure you hit the link in the show notes to get accurate crypto taxes with no guesswork. Thanks to CryptoTax Calculator for making today's episode possible.
Let's talk macro for a few minutes here, because Jonah, I actually really loved the sequence that you outlined on Twitter a couple weeks ago, because I'm thinking about it quite similarly, where, it feels like, we have a lot of these fiscal policies that are being front loaded in terms of the painful points and the sequence of how that tracks into risk assets. Can you I'd love to hear an update on how you're thinking about that sequence and where we're at in it.
Yeah, thank you. Might have to remind myself on the exact ordering of bullet points 5, 6, and 7, but I put out a really detailed roadmap for what I think the Trump administration is going to do. So I think Trump has surrounded himself with a much better team this time than last time. And I think that they're acutely aware of what they have to do. So first, let's lay out what they have to do, and then let's lay out how they think about doing it and what that means for macro. So what do they have to do? Trump got elected on a mandate to shift. He talked about tariffs a lot. You don't elect a tariff man if you don't want tariffs, right? He got elected. He's got the mandate. So he's kind of trying to shift taxation from income, some of the taxation from income to consumption. That's a big deal. And then on the other side of the equation, he also got elected on this mandate to kind of basically shift GDP contribution, or some of it, from government spending tons of money to maybe government spends a little bit less, and we'll have those people produce money in the private markets, privatization. So some of the GDP contribution goes from government to private industry. So those two things that he got elected on are big game changers, right? And markets don't like game changers, uncertainty. So I'm sure they knew there was going to be a little bit of indigestion when you try to force those two parallel agendas through at the same time. Now, how do you get there, right? I think Bessent is a real markets genius. I've followed him for years, and he's got Trump's ear. And I think that Trump and Bessent together are aware that they have a certain amount of cushion to mess with before things really head south as they pursue these dual agendas. And they're constantly monitoring that cushion. Some of it's the stock market, some of it's related to interest rates. But basically, I think the stock market could sell off another 20% from here, maximum, probably 10, before these guys start to panic and cushion things. And let's remember, all of the volatility that we're seeing in macro, and Bitcoin is trading 1-for-1 with macro right now. BTC SPX is stable as ever. Right? All the volatility we're seeing in macro has been created by talking heads, right? It's not like an asteroid hit a demand center. It's just Trump talking about what he's gonna do. So he can walk it back, right? So I think they're watching the stock market. If we're down another 10%, they're gonna start cutting interest rates. And after they cut interest rates, they can do QE, so they got plenty of cushion. But I think you should feel safe buying risk assets on another dip from here. And just finally, to wrap it up, as they watch that cushion, here's how I think it's going to play out. The first thing is you have a lot of cushion, so you can talk tough, shove your tariffs through, shove your agenda through, and to hell with the people who are upset about a 10% pullback. Next thing that I think drops is ceasefire in Ukraine. Commodities tank. Inflation gets lowered, then they can really cut rates. That stabilizes things. They suddenly have more cushion because stock markets will go back up. Then from there, after they cut rates, I think they can start getting a little bit more bellicose with Iran. They can start pushing through their tariff agenda more aggressively, screwing with NATO, firing more government workers. Then unemployment goes up, cushion comes down. And then after that, I think they can soften up a little bit and pump the gas a little bit more with fiscal and monetary.
When you say push tariffs more aggressively, how is it possible?
I
don't know if I agree with that one. I think they're being pretty darn aggressive with tariffs, but the rest of it
he's
tracks.
Talking aggressive, but he hasn't implemented a lot of tariffs yet. And what I mean is he can actually
that's fair.
really put them through.
The one thing that I'll say that I want to focus on your use of the word cushion.
Yeah.
I think that there's actually much less of a cushion than we all expect. And let me just take you back to kind of how we ended up here. Inflation gets out of control, and that really hits people that don't own assets the most. And so you go forward 3 years from 2022, we're now in a situation where if you actually look at the data, the consumption from people earning more than $250,000 a year is at its highest in 30 years, a percent of consumption from those people in the economy. And that means that the stock market is actually more important today than it has been at any point in the last 30 years for the continued growth of the American economy. Because if the stock market crashes, a huge percentage of consumption starts to decrease because these people start to feel like they're hit. And the people earning more than $250,000 a year are the ones that have the most asset exposure. And so what I get a little bit nervous about is if he has this view, I have a lot of room to maneuver on the stock market, and it comes down and then consumption crashes and growth really slows, that's going to be a very painful few months. Even if he starts to reverse course at that moment, it still takes, a month or two and potential 25-30% down in the stock market before that washes itself out.
I know I rambled a lot, but can I just add one comment there before we pass it back to you guys? While I agree with you, I think that Trump is also he has good political intuition, and no politician, especially not Trump, is elected with a mandate to tank the economy, cause unemployment, cause chaos. I mean, it would be a big blue wave in 2026 if the economy and the stock market are in trouble in 2025, right? So he has a time window to maneuver too, and that time is now. And then he's got to really U-turn out of it. So I think I think you will see even Donald Trump panic.
I agree with you on the time, because I think every president has some amount of time. I forget who was saying this and who we were discussing this with. Every president has some amount of time where they can blame the current issues on the predecessor.
Yeah.
Right.
Yeah,
and
fair.
that, I think, is probably the first year of the presidency. So he kind of has a year to get through this, to get to the other side, and then 3 years, and then another year prior to the midterms to show immense growth.
Yeah.
And actually that we're in a better spot because of what's happened and that he fixed his predecessor's mistakes. So I do think we're only 2 months into the Trump presidency. Like we can't sit here and say, okay, we're done now, because Trump is governing in a very unpredictable manner. Now, predictable in his mind, but unpredictable from the mind of investors. And you see that with the VIX trading above 20 consistently.
Yeah.
We actually had, for the first time in 15 years, we had, not 15 years, for the first time except COVID in 15 years, we had the VIX go up for 4 weeks straight. Normally what happens is the VIX spikes really hard.
It's a reverting asset.
And it's actually been trending, which is kind of weird, right?
Yeah.
This is a dream setup for these institutional Bitcoin investors behind us, though, because they're going to get their dips that they want to buy. Bear markets are only bad if you're planning on selling. If you're looking to go from 0 basis points to 10, bear markets are awesome.
Yeah. I mean, it also sucks when you have a large expenses coming up. But,
I will add a couple points to just that framework that you articulated, which
like a wedding, maybe.
Yeah, like the wedding I'm planning right now. I'm like, oh my God, please go up.
This episode is brought to you by Kraken OTC, one of crypto's longest-running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. Today's episode is brought to you by CryptoTax Calculator. Make tax season stress-free with over 3,000 integrations to support all of your wallets, exchanges, and on-chain activity. Simplify your crypto taxes by creating an account, importing your wallets and exchanges, then simply review and download your tax report. By using our exclusive discount code BW2025, you can enjoy 30% off all paid plans. This deal expires on the 15th of April. So make sure you hit the link in the show notes to get accurate crypto taxes with no guesswork. Thanks to CryptoTax Calculator for making today's episode possible.
I agree with a lot of the points that you mentioned in terms of this idea of, I think, first off, I don't think we're going into a recession. It's this interesting dynamic, like you say, like a lot of this uncertainty and volatility is the people talking. It's Howard Lutnick and Scott Bessent going onto the news every day and saying different things too, which is also difficult because now it's hard for us to piece apart what's the actual true goal here. But the economic data is weakening, but it's still nothing that's recessionary like. So when I think about, if we just look at equities for a second, we're down 10% or so far. We're into a correction. And I think a lot of that has been driven by positioning. Everybody was long Mag 7 going into 2025. That was the place to be. Positioning got super, super stretched in terms of valuations. And then you just have a little prick of a catalyst. And I think a lot of it is a rotational wipe that also looks macro driven. So
interesting.
Yeah. So, okay.
Rotation from Mag 7 to what? Just stop
back to everything ex-US,
to capital back
right?
home.
Oh,
Capital is
okay.
going back to Europe. It's going back to China. So I think a lot of it's being pulled out because think about this. I've been saying it a few times lately, but I don't think it was fully anticipated what was going on in terms of Germany's announcing like a $500 billion fiscal investment. They're unleashing deficits for the first time in decades.
Spending more on their own defense.
Yeah, and so bond yields started soaring. And as that occurs, the euro goes higher. And so you have that at the same time that, all these European asset allocators, they're all long Mag 7. If they're long Mag 7 and they're not currency hedged, they're down 10% on NASDAQ, and then they're down another 7% on the currency if they're not hedged. So you're down 17%. So if you're getting the tap on your shoulder and it's like, why the hell are we doing this when the DAX is outperforming, the Qs this year? So I think a lot of that capital is selling Mag 7 and going back home. So I think it's a huge rotational with some macro headwinds as well.
And one thing that worries me about that, so actually I listened to a forward guidance, it was either 2 or 3 ago, is really good, where you guys talked about the trade going from US stock market to the European stock market. Is this sustainable? Is this what's going to continue to happen in the future? Or is it the trade's played out and it's going to mean revert and we're coming back? Well, I mean, if you look, a lot of the move has actually been driven by European defense stocks. So if you look at Rheinmetall out of Germany, it's up like 200% since Trump getting elected. You look at BAE Systems, which is headquartered in London, up a ton. And so my question heading into, over the last month was, is this going to continue or not?
That's my question as well.
And so I kept trying to find, statements from German politicians or other politicians that would give me some indication of whether it was happening. And I came across one guy, he's a conservative MP in Denmark. And he comes out on Twitter and he says, I was instrumental in pushing through the F-35 purchases from the United States. This can no longer continue. We have to start reinvesting in, our own domestic production. So somebody follows up and they say, well, what if Trump decides to start playing nice? I mean, you can't just massively shift production and then Trump starts to be nice and then you guys are allies again and then you've wasted all this money. And his response was, well, it doesn't matter because once you experience volatility for the first time, you can't put all of your eggs in that basket again. You can't say, okay, well, yes, he was crazy for 3 months, but now he's pivoted and now he's going to be my friend again. You have no idea, right? Even if the Democrats get a president elected and then there's, in 2028 and then in 2032, it goes back to the Republicans. Basically, what I'm trying to say is I think the politicians in Europe and around the world are now coming to the conclusion we can't put all of our eggs in a volatile political system. And if anything, we're seeing the volatility of our political system go up over the last 15 years, not down. That's a mega trend.
The genie's out of the bottle.
The genie's out of the bottle. So I'm a little bit more nervous about that.
I have a more kind of nothing burger take on this. Like having lived in the UK for 10 years of my life, which I guess is on the continent of Europe, and watching the UK divorce itself from Europe, I have a very bearish view on Europe and on the UK. I think that yes, there will be more domestic defense spending. And so the European defense industry is probably a good sector play. But would I buy the DAX, the CAC, the FTSE? Hell no. I think that basically, Europe has a massive problem. One is just over taxation in general, socialist vibes over there.
Yep.
That's more of the culture, especially in Southern Europe, where people just work less. It's a fact.
Yeah,
it's good climate, whatever. And then the other thing is that I think the European Union is going to break up in 10 to 20 years. And okay, so in the short term, maybe you could still get a pop in European indices, but like the long-term impact, you're already seeing like far-right politicians getting elected all over the place because of the intractable problem of borderlessness in the EU, the immigration. It's not working for their culture. Basically, they've passed the event horizon of what that does to societies. And I think just this massive long-term headwind is created when you know that the European Union as a union, it's a peace project. Like, it's gonna go. It might not happen this cycle or the next, but how can you feel good about stashing your portfolio in those entire markets when that might be coming? You feel like you're dancing between the raindrops you have to sell. But the one thing, just to finish the point, I agree with Avi that all of this Trump-based volatility is creating, what the other long-term stage, like the other long-term table that's getting set here is we're heading towards a multipolar world. People aren't just going to hope that the United States pivots back to being nice. Like, we're headed to a world where there's going to be like European countries, a China sphere of influence, a United States sphere of influence, a Russia sphere of influence. And the only asset that can really perforate those hemispheres, especially as they start to become more combative with each other, is Bitcoin. So I think, from a long-term perspective, you can feel good about Bitcoin becoming, kind of a dark horse candidate for an alternative reserve currency. As the EU breaks up and currencies get effed with, I think Bitcoin's going to become a better store of value than even some of the G20 currencies. Any currency that's not in the G20, Bitcoin's already better than holding that currency. There's no debate.
Yeah.
But like, just to finish out the thought here, I really do think, going back to the US, just finishing on the US, I think that Trump isn't stupid. Like, the Democrats have nothing right now. They have nothing. They're a headless chicken running around. Trump could just hand them a really unifying issue if he tanks the economy and sends it into a recession. I don't think he's stupid enough to do that.
Yeah, totally. I agree with so many of those points, and I think it's the key tension here between, is this a mean reversion trade in Europe or is it a continuation? I'm somewhere in between, but I do think short term you're right. There's a lot of exuberance short term. There's been this rotational flow. Tying it back to Bitcoin, like you mentioned, I want to ask you guys as traders. So here's what I'm thinking about. Like you said, Bitcoin's trading one-to-one with U.S. risk assets for the most part, and that's been tried and true for a long time now. But it's also a global asset, and it's driven by liquidity. And so you have, let's assume Europe does this fiscal stimulus, and aside from that, you got China going pretty big too. So if you have these huge fiscal impulses coming from other countries, at the same time that the U.S. is trying to do the opposite right now, and then that gets reflected in NASDAQ correlations, you're finding this lever between global liquidity from the rest of the world versus QQQ correlation. Which one wins out in terms of setting the price action for Bitcoin?
It's a really, really good and difficult question to answer. There are a few parts here. Well, the biggest drivers of Bitcoin price, in my opinion, are China, Japan, and the US. Europe is kind of not really a big player in terms of directional flow. Like, if you go look at time zones, so this is a trade that I've put on basically every few months when there's a huge discrepancy in time zones since like 2019. You look at the EU time zone, you look at the US time zone, and then you look at the APAC time zone. And almost categorically, the EU time zone has the least amount of liquidity. It has the least amount of consistent direction in terms of flows. Like, you don't see, there are periods of time where you see every US session it goes up. And then in the EU session it sells off, in the APAC session it sells off. You don't really see that in the EU session a lot. There's never consistent flows. So I'm not so worried about what happens there. So let me talk about China and let me talk about Japan. So from that perspective, the Chinese stock market is doing very well right now. And that's actually bearish for Bitcoin, because a lot of the people that buy Bitcoin and allocate to Bitcoin do it in hopes that they're gonna outperform their own stock market. And for a long time, the Chinese stock market was stagnant. So a lot of Chinese individuals were pushing money into BTC in the hopes of outperforming. A strong Chinese market, I think, is neutral to bad for BTC. And then it's also about, if you look at the Japanese stock market, you have to look at the yen. right? If the yen is getting stronger, that's bad for BTC. If it's getting weaker, that's good for BTC. And so those are kind of the levers that I would look at for figuring out what actually matters. My answer to you right now is I have absolutely no clue.
Same.
Like what exactly is happening, because it's not clear. Like the yen was getting a bit weaker. The Chinese stock market is strong. The US stock market is weak, and that may shift. But that's what I'm looking at. You know, if there's a week of the Chinese stock market starts going down, the US stock market goes up a little bit, and the yen is flat, like I'm getting bullish long BTC.
Yeah.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets. This episode is brought to you by Wallet Connect, the connectivity network shaping the future of on-chain UX. From DeFi to NFTs, swaps to staking, Wallet Connect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. With over 220 million connections and 35 million users worldwide, Wallet Connect is the place to power your Web3 experience. With the launch of the Wallet Connect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. To learn more, follow Wallet Connect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
Okay, so you got three guys here who live and breathe markets. It's all we mostly think about, and none of us really know which one's going to win out from that. What do you do here? Do you just de-risk and wait it out?
So here's what I think. So when I was basically a young trader at Lehman Brothers, I worked for a real superstar, a mentor of mine who I still respect to this day. His name is Jeff Saki. He's a big credit trader, works at Citadel now. And he gave me one of the best pieces of advice I've ever gotten as a trader when I was just starting out. Very fortunate to have this mentor and advice. He said, Jonah, you don't always have to be 10 out of 10. Sometimes the right trade is just to do nothing. Because, sometimes there's no trade, right? Now, obviously in some market there's a trade, but we're focused on a couple of things here. So within our little slice of like macro indices and Bitcoin, which is what this conversation has been focused on, we're in no man's land. Like 10% higher, you're probably supposed to lighten up. 10% lower, you're supposed to be buying with both hands. Right now, whatever your core medium to long-term views are, you should have those expressed with 60 to 80% of your portfolio, and the rest should be dry powder, I think. What are you guys doing?
When vol is high, every move means less, right? Like a 5% move from Bitcoin when vol is low means a lot more than a 5% move from Bitcoin when vol is high. And so right now it's very hard to read into the minutia of direction here.
I mean, just look at yesterday at the FOMC. We surged pretty high and it's given it all back. It's just high variance.
Super high variance. And a portion of that was that the FOMC, a portion of that was front running the Trump video here at DAS. Like it's I will say, like, it's incredible how much that moves markets.
Yeah.
Like every time Trump has some event that's related to Bitcoin will go up in the face of that. And it's been 100% hit rate to short. Like the minute after he starts speaking, it's like 100%.
It's not just Bitcoin, dude. Every market. I remember being an oil trader in 2018 to 20, where Trump was tweeting about oil all the time. I mean, there were face-ripping rallies. A $10 rally when oil was $25 a barrel, from 25 to 35, because Trump tweeted that something about OPEC. Like Trump, I never have I seen a public figure move markets like Donald Trump. And so this is why my underlying thesis, I'm just going to repeat it again, is no, he is not going to hand the Democrats a golden goose issue of look at Donald Trump and the Republicans causing the stupid recession again. Happened last time, told you so. He's not that dumb. He's not going to do it. So if we dip, I think this is the wrong price to get 10 out of 10 max long.
Totally.
But like if we dip, you can bet your boots that he's going to U-turn it, and he can.
Here's what I'll say on how I'm approaching this. there's a theta decay to the bearishness here. Every reason that we're bearish has been talked about now for at least 2 to 3 weeks.
Totally agree.
And so there's all of it's already out in the open. And yes, it could get worse, but basically every day that goes by that it doesn't get worse, that there's not a new catalyst to send us lower, it's more likely that Bitcoin goes higher and in the short term. And the reason is because people have de-risked. Because nobody here is sitting around going, I've sold my Bitcoin and I'm not going to look at it. They're going, I've sold my Bitcoin and I'm going to wait for the dip to buy back in. And every day that you don't get the dip, the current price of Bitcoin looks more attractive to you. You might have a limit set at 70K. What if it trades to 75 and then goes back to 80? What happens to that limit? Well, historically, what happens is that guy pulls his limit and just starts buying BTC because it didn't get there and time has passed and he didn't get the dip he was hoping for. So basically every day I'm chipping in a little bit more. You know, what I do is this is what I call the Costanza rule. It's on days when Bitcoin is up, you sell it. On days when Bitcoin is down, you buy it. You just do the opposite of
Avi is the only surviving successful range trader in crypto.
I was about to say the only guy
so
successfully mean reversion trading.
So uncommon.
It's literally, you just have to battle your own emotions. It's so funny how that works. If I wake up and I see Bitcoin's up and I think to myself, oh fuck, am I gonna miss the rally? Like, is this over for me? Like I have to buy back in, I immediately sell.
That is so key.
It's actually insane like how well that mentality works.
Yeah.
I'm so bad at that I do the opposite. And like I've chopped myself up enough in my career that I just stopped trading short term. Like Avi trades short term like a pro.
Yeah.
I just stopped. I will not trade with a time horizon of less than a week unless I have information that I strongly think will impact markets, or I have a bot with a signal that's short-term trading on my behalf. And I just threw in the towel on that because you can't just do it sometimes. Like for anybody listening who's like, oh, I want to dabble in short-term Bitcoin trading. It's not something that you can dabble in. You have to be like Avi, like you're at your screen all the time.
Let me just, preface this with like, I'm not always right. Like I do get chopped up.
I was told you have to always be right if you say directional calls though.
Yeah, that's true. That's true.
According to CT.
If you ever say anything wrong, your reputation should be ruined forever. You should actually be thrown in jail.
Yeah.
Like I think being wrong is a jailable offense in Trump's America.
Okay, guys, I think we got to wrap it there. We are the last recording on the Expo Hall of the Digital Asset Summit. That is it. If you weren't here, you just missed a really great 3 days. But the good news is that we got permissionless in June in Brooklyn. If you're a builder, if you love the tech, you got to come to that. And then we're doing the Digital Asset Summit again in London this fall, so don't miss that as well. But it was a ton of fun. It's good to catch up with you guys. Good to see you. That was always great.
That was fun. Thank you, Felix. Really appreciate it.
Thank you so much. I always learn from these conversations. Appreciate
Likewise.
you having us.
Yeah.